let's get started. What's good, everybody? Mokama Sunday service. Today, our topic is going to be about Tesla and Google earnings last week. And as you can see, uh, my advice is to not buy Tesla. And I say don't buy Tesla. I just don't see the story there. And Google reported last week as well. My advice for that would be to buy Google, but at the right price, which is always my advice, right? Momar Reed. I have about a couple $100,000 in the stock market, and I watch it every single day, every single week, because I have my retirement accounts in the stock market. And unlike some others, I don't let anybody else invest my own stuff. I would rather look at the market every day, every week, and invest my own retirement funds. And so today we have a episode about fundamental analysis, primarily because we just had some big earnings reports last week. Tesla earnings came out. We're going to go over the Tesla earnings, show you how to find them. Google earnings came out last week. We're going to go over Google earnings, show you how to find them. And then we're going to look at the charts to figure out if we did want to buy one of these stocks or sell one of them, where would we do it, right? Because I've actually been thinking about putting some puts on Tesla just because I just don't see the short-term story there at all. Let's go back. I actually wanted to go find Tesla earnings. So in order to do that, what do I do? Well, since we're talking about Google, I would Google Tesla investor relations, and then I would click the investor relations page. And this is for any publicly traded stock. Like, you don't need to go look at CNBC or CNN reports of earnings. I challenge you to go look at the earnings yourself. Go look around the website and figure out how earnings are typically reported. What do they look like, right? So they usually have like a shareholder deck, typically 30 minutes after reports. Generally, the company will actually do a live audio session to the shareholders and anyone who wants to listen, to tell them about future guidance, they'll go through the earnings reports sometimes, tell you what are all the risks, what are the things that they're excited about, right? And then sometimes what I've noticed too, if you're looking at the chart during earnings releases, is the stock can move up or down a lot based upon the Q&A with like the board or the CEO, right? Because while some of the numbers they're reporting can be really good, they'll tell you, oh yeah, but the next 2 quarters are going to be terrible, and then the stock will tank. So just because they reported great earnings in this particular period doesn't mean that the forecast is going to be good. And mostly when we're dealing with stocks, we're talking about future earnings rather than what happened in the past. But an earnings report can be a good snapshot of a company, specifically from a fundamental standpoint. Like, is it making money? Is it growing? What sectors or what products is the company selling that's promising in the future? What are some headwinds, and like why? Specifically for Tesla, if you've been following Tesla, you know that Elon Musk has been running his mouth and entering into the political scene, which hasn't been a good thing for Tesla's brand. As a result, its sales have been dropping consistently. And the brand has been tarnished a little bit. And so we're seeing essentially the results of him being a Trump supporter, him entering the government space, him getting into a tiff with Trump and losing some government contracts, him not getting what he wants, or Tesla, and getting these credits for EVs renewed, which made Tesla more money or led people to buy more Tesla cars, right? So, but specifically as it relates to the release, the most recent release, you'll see it was July 23rd, 2025, last week. So you might want to look at all of this stuff, right? I'm generally trying to find The profit and loss statement. I always look at the the balance sheet to see what the asset debt ratio is. And then I'm generally comparing the earnings this quarter or the last quarter to the prior quarters to figure out, hey, is this a company that's growing? And then for any particular company like Tesla, the main numbers are going to be like car deliveries, right? Are they up? Are they down? And so those are the sorts of things that I'm looking for, right? They're going to have the press release. The press release is generally more of a rosy thing for me. Of course, they're going to emphasize more of the positive things about Tesla, which I assume are going to be their robo taxi and then their potential future robotics products. But let's download the shareholder deck. All right. And this is the first time I'm looking at it because I wanted to kind of show you, like, if I'm looking at earnings, what am I looking for? All right, here we go. Here's the financial summary in the shareholder deck. And if you're looking at this quarter specifically, so you're looking at total automotive revenues in Q2. What I don't like is it's 16.6 billion. Q2 of 2024 was 19.8 billion, which means if you're looking at a comparable quarter from last year, you see it's down. Year over year, that's down 16%, right? Looking at their energy generation and storage revenue, it's 2.78 billion, right? And the quarter of last year, it was 3 billion, right? Which means it's down as well. Um, and the services revenue, 3.04 billion, is slightly up from the last quarter, right? And I care less about these two categories versus the automotive revenues because that's where most of the money is coming in. I just don't like the fact that it's down 16% year over year, down from the quarter previous, from comparable quarter from the year before. The quarter previous, it's up from there, but as you remember, if you recall my last Tesla overview when they released earnings in Q1 of 2025, that was significantly down from Q4 and from the year before as well. So with that said, I just don't like their numbers, right? If you think Tesla is primarily a EV car company, it's down 16% year over year. It's down 7% in the energy generation and storage revenue. The services revenue is slightly up. I assume that's people who are buying the cars that are paying for the subscriptions for the full self-driving packages, the Wi-Fi in the car. And I know this because I used to own a couple of Teslas, right? So same thing, total revenues down year over year, total gross profit down year over year. Um, at least it does have some gross profits, 3.8 billion, because the GMs of the world that reported recently didn't report great earnings either due to some of the tariff hits, right? Total gap gross margin 17%. That's not bad. The issue is just the revenue is down and the profits are down, right? Operating expenses are down slightly. Income from operations, look at that, down minus 42%, right? And so for me, from a fundamental standpoint, this is not what I'm looking for something to be in my long-term portfolio. A company that's down 42% on income. That's not what I'm looking for. I'm looking for stocks that are up, at least that are growing gross revenues, growing income, and there's a divergence between them growing revenue and the stock price being down. I don't want to see a company whose revenues are down and income is down and sales are down and the stock price is down. That's not like a company that I'm looking forward to like purchasing in my long term account or doing a leap on in the long term. So that's why I'm not bullish Tesla right now. Um, let's go look even further. Just looking at decline in vehicle deliveries, lower regulatory credit revenue. That's what I was talking about with those EV credits that are going down. Reduced average selling price, meaning the price of the cars are going down, which means the margins have to go down if you're selling the price or selling a car for less. Decline in energy and storage revenue. A little. The only plus is the growth in the services revenue, right? So yeah, I don't like it. Let's look at it specifically from a car standpoint. The Model Threes. It does look like the Model Three revenue, or at least the production, is slightly up from the quarter of last year, slightly. But the other models, oh, that's the truck, the Y, the X, minus 45%. That's ridiculous. And so, like, forget about what you think about Elon's politics. If you're just looking at the last 2 quarters, his run with the Trump administration did not help Tesla at all, right? Um, and you would think that what he would have gotten or he would have gained out of that would have been an extension of the EV credits, but the Trump administration ended that too. So it was like, why did he even do all of this for if it's leading to minus 45% in the production of the and sales of the other models? So that's where it looks like it's lacking. And the Model 3 looks like it's holding up, but everything else, like it's that's I would consider that close to a crash if I had, in my other models, like minus 45%, right? But it looks like the Model 3, oh my bad, this is Model 3 and the Y. The Model 3 and the Y are what are delivering, but everything else, it appears like the truck, the X, I know they discontinued some. They don't look like they're performing as well. And I just don't like minus 12% year over year Model 3 and Y deliveries. Minus 52% on the other models. Total deliveries are down 13%. Right? So they really need to get this robo-taxi service up for it to even make sense. Let's see, is there anything else? They got some other things in here. Here's the balance sheet. Something that I like to look at. Looking at their cash, total assets 128.5 billion. Total liabilities 120. It's 1 to 1. Something else that I don't really like as well. Or actually, I'm sorry, I'm tripping. Here are the total liabilities. It's actually, this is pretty healthy from a cash standpoint. Tesla is pretty healthy though. The total liabilities are 50.4 billion. Total assets 120.8. So it's greater than 2 to 1, 2.5 to 1. So that is something that it does have going for it. What is great about Tesla's business model is that it does not make its cars until it has the order, versus the old car model where they produce a bunch of cars, they put them on a lot, and then they sell them, right? Um, and try to sell everything else, and then whatever doesn't sell, they discount at the end of the year and try to get those cars out. If you've ever gone through the Tesla buying process, you order your vehicle first. Then they make it for you. So I don't feel like there's any wasted materials. They're not just printing cars on the line that aren't getting sold like that. So their business model does seem to be better than most others. And then I always go look at the goodwill. They're not even pricing in a lot of goodwill either, which is what a lot of other companies do, which inflates this assets number. This is the biggest. Their property, plant, and equipment. Right? What's the 61,000? Oh, that's the total assets in terms of cash and inventory. Yeah, Tesla is actually, and I don't like the way the sales are dropping and whatnot, but it does have a pretty decently strong cash position and asset position. Um, that's 2.5 to 1. So even if the sales drop, I don't know if this is in like bankruptcy risk or anything like that, because their cash position is pretty strong, right? So I will have to say that. Um, can't lie to you about that. I'm being honest. I don't like it for other reasons, but maybe if it does dip low enough, Tesla would be a good buy if it dipped to like $150 or something like that. But other than the balance asset to debt ratio, I don't like the last 2 quarters of it reporting earnings, which is why I would say I'm not buying Tesla. I'm not putting this in my long term portfolio. I'm not saying you shouldn't trade it, you shouldn't day trade it or swing trade it, but this isn't something that I'm putting in my long term portfolio. Right? That's just me. All right, now let's go look at Google. Same thing. And I'm juxtaposing these against each other, right? Like comparing and contrast. Because let's say you did have $10,000, right? That $10,000, like to an average person, that's a lot of money, right? So, $10,000, should you invest that in Tesla or Google, right? It's the opportunity cost, right? So, where are you going to get more alpha potentially in Tesla or Google? Now, so let's look at their earnings. Right. And Google has some complications too. The main issue with Google is not its business. It's not what money it brings in. It is the DOJ currently that's it's been adjudicated a monopoly, and I believe come mid September is the next ruling coming down on whether or not it needs to like divest Chrome, the browser, which I'm using right now. And I'm not using it because Google told me to. I'm using it because I felt it was the best browser. I used to use Internet Explorer, sucked. I used to use Safari. I hated Safari on Apple computers. Then I even used Opera and Firefox for a while. And then Chrome came out and it was just better. So I started using Chrome. It was faster, it worked better, so I used Chrome. um, and so that's what the big remedy that the DOJ is seeking right now is divestiture of Chrome, which people think might lead to search volume decreasing even lower for Google, and or making it end its deal with Apple, where it's essentially the default search platform for iPhones, right? So these are some of the potential remedies that are being thrown around by the DOJ that I think is affecting Google's skyward trajectory. Because if you look at its earnings, so look at the quarter, right? Compared to the last quarter. Google made $96.4 billion dollars this last quarter, which is up from $84.7 billion dollars from the quarter before. And if we're comparing this with Tesla, this is night and day, right? Its revenues are up 14% year over year, right? Operating income, profit, like its profit is up 32%. Or I'm sorry, I'm not sure what the percentage is, but it's up from 27.4 billion to 31.2 billion. Margin, and it's maintaining the same operating or net margins of 32%, right? Net income, the profit, or I'm sorry, this is kind of both are profit numbers, but like the net income, if this is their EBITDA number, right? 23.6 billion in the quarter before, the quarter or the prior year quarter, and this quarter 28.1 billion. Earnings per share up, right? This is a company, this massive $1 trillion company that continues to grow, right? That's what I want to see in something that I have long term. And then, candidly, I own Google. I own 300 shares of Google on 3 separate accounts. So, um, the reason why I look at Google's earnings as well is because I want to see what my current investments are doing. And it's Google's been killing for me over the last like year and a half or two, right? Since I've purchased some leaps and then let them convert into shares. And this is why I didn't sell my leaps before they converted into shares, is because Google keeps printing money. Google search, that everyone thinks that the chat GPTs and the perplexities and the Claudes are going to take their search revenue. I still don't see that happening, right? 48.5 billion in the quarter before and last year, 54.1 billion this quarter. So search revenue is still growing. Maybe the volume is down, but the revenue keeps growing. YouTube ads went from 8.6 billion to 9.7 billion. That's the main reason I bought Google in the first place, is because I think YouTube is a small sliver of what it's going to be in 5 to 10 years, considering that every single generation watches YouTube, including my 6 year old, right? And Google Network, actually don't know exactly what this is unless I have to go look up what that revenue is, but Apparently, it accounts for 7.4 billion. It's slightly down, but clearly that's not a big revenue driver for Google. I'm not sure if this is like their display ad network or whatnot revenue, but it could be. I'm not sure. And this could just might maybe be their revenue Google search when you just type it directly into Google or into your browser and get results. So I would have to look up specifically what the Google network revenue is. But if you're looking at their advertising revenue overall, went from 64.6 billion in the last quarter, the same quarter of last year, to 71.3 billion. Clear growth. Their subscriptions are even up. 9.3 billion up to 11.2 billion. That is actually pretty significant growth as well, right? And then their services total, just all of these in one, 73.9 billion up now to 82.5 billion, right? On everything they're up except for the Google network, right? And their cloud, this is the most promising area because Google is currently number 3 or 4 in cloud behind AWS and Microsoft Azure. But look, it still keeps like from 10.3 billion in the prior quarter to 13.6 billion. That is a greater increase, like percentage wise, than any of these other categories, right? To go from 10.3 to 13.6 in a market that we know is bigger because AWS and Microsoft are making what 2-3x this every quarter. So Google still has some room to become a competitor in that particular space, right? So total revenues from 84.7 billion up to 96.4, right? This is how I go through an earnings report. So when I saw this last week, I started salivating and I'm like, damn, even with this DOJ suit, I think I still need to keep my Google shares because they're still figuring out a way to just keep printing money. And if you've heard me go on my Google rant before, and all of the industries of the future, Google is in them. Robotaxi, it owns Waymo, right? And if you've been in LA, you see all these Waymo cars. I see at least 10 every day now. So I think it's further ahead in the robotaxi service than Tesla. So if you're bullish Tesla for robotaxi, I think Google's ahead of them. They already have the regulatory approval. They've been testing them for longer, and they have more money than Tesla. So like if I were to pick a winner in the robotaxi service, it would be Waymo, and ideally they partner with a Lyft or a Uber to get that particular platform together. But Google has enough data where it could build its own Uber and own Lyft platform. But I think a strategic partnership would be for them to like purchase Uber or for them to purchase Lyft, which is totally possible. Google has enough cash for that, right? It makes 96.4 billion a quarter, right? So it totally has the cash to build to pay for one of those companies that integrates all of the people to give it the network, and it already has the cars out and has been testing robotaxi for what a few years now. So it's in that industry. Quantum computing, which they think is going to be the next AI sector, right? Google is in that industry, had a breakthrough a few months ago in quantum computing. And so, if that's going to be a big sector in the future, Google's going to be there. AI, it has Gemini. It already integrates AI results inside of Google searches, which has been doing well. If you've listened to their press releases and whatnot, that their Gemini integration into all of their products and all the Google Docs into Google Suite, right? That's leading to an increase in subscriptions and service revenue and cloud, right? Because the more of the stuff you have, the more that you end up paying for your Gmail cloud subscriptions and your Google Suite subscriptions. I know me, my business backend runs on Google Suite, and every time I pay for a new email address, they charge me a higher monthly fee. Or when there's too much data in my email, they charge me a higher monthly fee. So I assume that's where all the cloud revenue is coming from, is from people like me that pay that monthly fee to them. And I don't see me needing less cloud space in the future, personally. So I think those numbers are going to go up. So AI, quantum computing, robo taxi, and cloud services, which are, I say, four of the largest TAMs that are out there right now. Google has a product in them. Even the augmented reality side, Google Glass was before the Meta Ray Bans, before the Apple Vision Pro, right? So I just, other than the government, I just don't see how Google stops printing money. Right? Look at its assets in terms of cash and cash equivalents and like securities, probably stocks and Bitcoin or whatever, right? $95 billion of like cash on hand. This is why I'm saying it could go and buy Uber. It could go buy Lyft. It has $95 billion of cash just on hand. It can invest more money into CapEx, which is what they're saying they're going to do, which is why I'm bullish Nvidia, AMD, and these chips stocks as well, because Google said it's increasing its capex to be able to do more data center stuff and cloud. And so for me, that means they're buying more Nvidia chips. They're buying more AVGO Broadcom networking solutions for these chips, right? And so I think the semiconductor market is still going to keep going up because a lot of these massive $1 trillion mega cap companies are still investing tons and tons of money on infrastructure for AI, Meta as well, right? So this is why I'm just in love with the Googles and in love with the semiconductor companies, right? So if you look at its total assets, right, it has $502 billion, and if you're looking at the total current liabilities or even total liabilities, right, it's 4 to 1, even greater than Tesla's 2.5 to 1. It's like 4 to 1 with Google, right? So is Google going to go bankrupt anytime soon? No. Can Google survive a downturn? Absolutely, right? Look at how much it has in assets, and even its goodwill is not extremely inflated, but it does have $203 billion in property and equipment to liquidate if something went wrong, right? But it doesn't even need to do that because it has just $95.1 billion in cash just sitting, you know. And even if you count the accounts receivable, so like $166 billion in cash or assets that it's owed, like just kind of chilling, right? And the margins are amazing. So this is literally the best like cash printing machine ever made. And other than the government breaking it up, which is a potential risk for it, I still love Google. I still love Google as like a top 5, top 10 company that you can invest in. Like it prints money consistently. Ridiculous. Let's see anything else in here. Some different breakdowns, right? So that's how I would go through the earnings of a company to kind of go analyze it from a fundamental standpoint, not necessarily from a technical standpoint. That's the next thing that we're going to do. Let me open up Thinkorswim. So we went through Tesla's earnings. They weren't so great. The only thing that I found about that company that gives me some sort of hope that it's going to last for the future is its balance sheet. It has way more assets than it does have debt because I think of its business model. So I do think maybe there is a price at which I would buy Tesla, but I don't think I could put it in my long-term portfolio right now. I would probably want to wait until it gets to some sort of where are we? Hold on. I would want to wait until it gets to some sort of point where I'm more confident in its robotics, whatever it's doing there, or if its robo taxi service actually does take off. That's when I would think about hopping into Tesla. But when you're comparing and contrast, why hop into Tesla when you got a stock like Google that's doing way better, right? So let's look at Tesla first. its actual chart. Long term, here's a 5 year day chart. Let's do a 5 year week chart. Right? So it's been bouncing along in this range. Like the range that I really like, and I said my price is 150 for Tesla, is because that's where these lows were here. And for a company whose fundamentals that I don't really like, I'm not gonna get it in this midpoint. I'm not gonna get it near its high. Like I want to make sure this thing is significantly discounted before I decide to dip my toe in Tesla. I want it to be at least 75% off its five time if off its 5 year high before I would even think about it. And then I still think Elon is distracted, and maybe if it's not government anymore, the man owns $6 billion companies, right? And I just think he thinks some of these other ones are more fun than Tesla at the moment as well, right? So if I'm going to mark up my chart, I usually go take this Fibonacci retracement tool right here, right? And then I'm gonna hit the high, which is 488.54, and then hit this low of 91 bucks, right? You can right click it, edit the properties, make sure that it's all accurate, right? Bam. And so, yeah, this 150 mark is going to be at least 75% off. But I'm not touching Tesla unless it drops that much. I need it to hit 150. Even better would be $100. If it gets down to $100, maybe that's when I'll buy a leap in Tesla. I probably still wouldn't load up, and I'd still trade some of it. If it came back up to 200 bucks, I'd probably get out of half of my position. But I'm not buying Tesla unless it's down to like 150 bucks, right? So that's where I would buy Tesla potentially. But instead, look at Google. And Ange, didn't you buy Google? Didn't you buy some shares at 160?
Sure did. I was mad I didn't get more too.
Uh-huh. And it looks good now, right?
Yeah.
And and for me, like, and that's why, like, if I'm going long term, I'm looking at the fundamentals. Like, the company is printing money. It's printing money. And so I just, at this dip right here, like that's what I'm looking for. A company printing money but the stock somehow is discounted. Like, but you see it's doing way better than a lot of these other companies that are shooting up. And so I'm looking for divergence. Look, the fundamentals of a company look really good, but the stock price isn't that great. That's when I'm looking to dip in. Same thing with AMD. That's why I purchased some leaps in AMD. Like the fundamentals of the company, it was growing revenue consistently, but the stock price was down 70%. That's what I'm looking at, some sort of divergence. So at least if my 40% off rule, if I wanted to buy some more Google, I would have got some at like my price for Google would still be around 150 bucks, right? To get in. Yes, Google is doing well, but I never buy close to an all-time high. It's close to that 207. It's still a little bit off, but it's still close to that 207. So if I were to buy Google, I would wait. Stocks always pull back. So I would be waiting until it hits 150 again if I were to enter Google. And we know that DOJ's decision is coming in September. I don't know why September 22nd in my head is, I looked it up the other day. I know it's coming into September. So if I were to think about getting out of Google, I would probably get out of Google before that decision comes down. And if I were thinking about getting into Google again, I already know that it's probably going to dip after that decision comes down, whatever the remedy is going to be. And then that's when I would be looking to buy. And then also the market tends to dip in September anyway. So that would be a perfect time to get into Google if you really want to Google, would be when that dip is likely to happen, when whatever remedy is handed down by the DOJ, whether it's to have them sell Chrome or cut their deal with Apple, or have to license out some of their ad technology to other competitors, or well, I'm just thinking of all the things that I've heard of over the last few months that were potential possibilities that the government might do. And the one thing that might happen where Google would take off is if the government just gives them a little slap on the wrist and just says like, don't do this again, or we're going to be monitoring you for the next 5 years. If that happens, then I feel like Google's going to take off. If the if the remedy is way less punitive than what people are thinking right now, then Google could potentially take off, because I do think it's underpriced, because people are kind of waiting on what the government's going to do with its potential divestiture. I don't know why I can't say that word. It's potential divesting of Chrome, the browser, uh, potentially later this year. And then even if that ruling does come down, just understanding how the law work, I know they're going to appeal that at least 2 or 3 times up to the appellate court, if not the Supreme Court, one way or another. And because the higher courts are more conservative now, I wouldn't be shocked if they overturned the lower court's decision nowadays. Especially if Google decides to kind of sidle up to the president, and we know how that works. So, and I assume they're probably already doing that. So donating to his his campaign fund, or to some Republicans, to try and ease the pressure of some of these potential remedies if it gets to the higher courts, right? So that's really it. That's pretty much what I believe. Is like, look, if I had $10,000, $5,000, I would prefer to invest it in Google over Tesla. Tesla is more discounted off its all-time high, but I just don't like the trajectory. The stock price is down and the revenues are down. Google's stock price before these few releases were down, but the revenues were up. So buy stocks where the revenues are up but the stock price is down. That's generally, I would say, like the simplest form of how I invest. Is I'm looking for good companies at better prices, right? Um, Something that's a little bit of a discount. So if we go back to my slide, stock picks for this week, or what sectors am I looking at this particular week. Once again, it's in the YouTube notes for every video. My disclaimer: this is for informational purposes only. I am not a licensed professional. You should refer all of your trades and investments to your licensed professional, or in conjunction with them, and do your own research. This is not investment advice, right? So next week, watch your head if you are swing trading or day trading, because we have some earnings coming up next week. Monday is pretty slow, but Tuesday you got Visa, you got UNH, you got Procter and Gamble, right? So you got a lot of healthcare next week, and you got Visa, Spotify as well. I keep track of that because of the music, right? Big ones on Wednesday, you got Microsoft and Meta specifically. These two can move the entire market. Thursday, you got Apple and Amazon. Those two can move the entire market, right? And why can they move the market? Because Microsoft is a $3.8 trillion company. Meta is a $1.8 trillion company. Apple is a $3.2 trillion company. Amazon's a $2.5 trillion company. MasterCard's pretty big too, $511 billion. AbbVie, some more healthcare, right? So, and then you got Berkshire, which is a $1 trillion company after Warren Buffett has announced that he is retiring, right? But they own a lot of other securities. So next week is going to be a difficult swing trading environment. Ideally, like, I'm trying to stay away from the sectors that are reporting. Even you got some energy reporting. The two biggest energy companies are reporting next week, ExxonMobil and Chevron as well. So swing trading is going to be very difficult next week, especially in these sectors. So I would be trying to stay out of the tech sector, stay out of the healthcare sector, even consumer discretionary with Amazon coming up. If I were to be swinging any of this stuff, I'd be getting out before they report earnings. But it's going to be rocky next week depending on how these earnings go one way or another. And then, like, for instance, like, since Google's earnings were really good, that's probably going to up the bar for Meta, right? And then like what I've seen, like so if Microsoft reports earnings that are really good, then that's going to up the bar for Apple the next day, right? Same thing for Amazon, right? It's all relative. It's not just how well you did; it's how well did you perform in conjunction or in comparison with all of the other mega cap companies too. Because if I got $10,000, might determine whether I put that in Google, Microsoft, Meta, Apple, or Amazon, right? Or Visa or Berkshire Hathaway. So that's mostly what I'm looking at. If I go to koifin.com, look at what sectors have been trending. I know it's look at the metals and mining. If I'm trading something next week, I might be in this sector. The reason why I like this sector too is that I don't think there are any major companies in this sector that are reporting next week. I'd have to double check that, but look at the metals and mining that have just like taken off. So that's the sector that I'd be looking for a pullback on. I'm not really doing oil because I know if I do swing, I'm getting out by Thursday, Friday before Chevron and Exxon report. XLI is kind of maybe Uber, GE I'd look at too. So maybe those are probably the two sectors that I'd mess with would be XLI and XME. Those are the highest trending sectors over the last 30 days. If we go to actually, let me go back. So if I'm looking for names to trade particularly and I see XME is there and I don't know what the top stocks are in XME are, I'm just going to go to one of these ETF sites, go look at the top holdings, and these might be the names that I'm looking at like trading. The ones that I'm familiar with are Newmont, Alcoa, things that I've traded before. But just looking at these names, these are some of the tickers that I would think about trading because if XME is up, it's because of these names, right? So let's go. So MP materials. Look at that. Look at that chart. What I'd be looking for though is like, are the options liquid at all? Actually, they are. Yeah. So some of these names, like that, this is how I go hunting. Is I'm gonna go look at the sector that's trending. Then I'm gonna go look at the names inside of that sector that are the highest weighted. So then the next one that I saw was Cleveland Cliffs, which is CLF. Are the options liquid? Yeah, the options are liquid here too, and they're affordable. This one isn't trending as well as the other one, so I'm not sure if I'll trade that one because I don't see as great of a trend. In fact, let me change my chart to have my trend indicators on there. Actually, no, it is trending. Cleveland Cliffs and XME is trending. I would grab that potentially on a pullback next week. Love the options. So the third Friday is where I find the most liquidity, and that's OpX typically. Got a bunch of open interest at this strike right here at $10 and above. So clear liquidity to do some calls on, even potentially some liquidity to do some spreads on the put side, some put spreads. So that would be on the list. What was the first one? MP. Yep, that one's positive trending. What else is on that list? Uranium and Warrior Metal Coal. I don't see any liquidity there, so I wouldn't trade that. And what I mean by that is look at the open interest here. Number one, so this is a stock that doesn't have a ton of options. It looks like just monthly expirations. And I just don't see a ton of liquidity. And I don't see a ton of strike prices. So I'd probably do a hard pass on that. And even the spreads between are too wide. So I wouldn't trade that. Let me go Uranium Energy Corp. UEC is the ticker. Look, yep, some liquidity there. And what you'll see is like what I've noticed is when a sector is trending, I find more liquidity there. If it's not trending as much, then there's no liquidity. So it's almost like the market is flowing towards these particular places because they see like that's what's up. Look at the trend on that name. That's crazy, right? So I'd be looking for a pullback on this next week potentially too. And then let me just do one more. New core. No, I'll do three more. The ones that New core. I haven't traded New core before, but I've traded Alcoa and NEM. That's positive trend too. Options are too expensive where there's liquidity, so I probably wouldn't trade that. Let's go Alcoa, which is AA. Some liquidity there. Yep. And not so much of a trend, so I wouldn't trade Alcoa. And the last one is NEM. Had a gap up. It must have had earnings. Yep. Did well on earnings, so I let it cool off. No, maybe Tuesday. No, Monday would be a good day. It'll be a day or two after earnings for it to have cooled off. So a pullback on NEM, especially coming if it comes back and clears that gap and comes back. That would be a great pullback trade there. And let's look at the liquidity. Tons of liquidity in these options as well to do calls. So yeah, that's where I would probably be focusing my attention on those 4 or 5 names that had really strong trends and had really strong liquidity. I'd take them with some calls or some spreads next week. That's the main place I'm going to be looking. And then let's look at Uber. Nope. XLI. GE is big in XLI. GE is trending well. GE would probably be on my list too for a pullback. But the XME names, the metals and mining names were stronger. So like if I had like a tier one, it would be this sector. Even on this, even if XME itself pulled back. Usually though, I don't find a lot of liquidity in here. Nope. Look at the spread. So I wouldn't trade XME itself because the difference between the bid and the ask, even where, yeah, this is ridiculous. So it'd be too volatile. So I'd trade the underlying names, those 3 or 4. That's what I'd be looking at the swing next week, if anything, would be in that sector. But yeah, that's how I go hunting for names on my pullback strategy. Trying to find something that is trending upward, that has an exhaustion day to the downside. Hop in there, and then hopefully it keeps resuming its trend upward. But the metals and mining, like if there's not a bunch of earnings coming up in those names, like I didn't check to see if there was. I know other than Newmont, the other names, what was it, MP? I don't see earnings anywhere. Let me see. What was the second name? Cleveland Cliffs, CLF. It already had earnings, so that's safe to trade. Safer, I should say. Let's say uranium, UEC. I don't see earnings coming up anytime soon. So that looks decently safe to trade. I would just double check that. Right, but those are the names that I'd be looking at next week. All right, that's it, folks. Unless y'all got comments, questions, concerns about Tesla, Google, any of the names I'm swinging next week.
Thank you, sir. Yeah, no, nothing this way, man. I'm gonna probably relook at this one.
Yes, sir. All right, Mokama Sunday service.
Appreciate you.
I'm trying to do every week, but recently it's been more like every other week. So, and mostly because I've gone over most of the topics that I understand, just go relook at some of the old episodes. But usually now, like if some news comes out, like these earnings reports, like next week we can go over Microsoft, Apple, Amazon, and what was the other one? Meta earnings, the biggest names, to figure out if there's any like alpha and getting into one of those names if one of them declines but had a decent earnings report, which is usually what I'm looking for. something that goes down, but the earnings are still decent, those are usually the stocks that I start hunting in my long term portfolio. Uh, but yeah, till next week.
All right, man. Take it
Yeah,
easy.
peace,
Peace.
doses.